I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. Welcome back to the show, Ted.
Well, it's a fascinating time to be back, Jim, that's for sure. If you're paying any attention whatsoever to what's going on, of course, in the U.S. election, could it be more entertaining than what we're seeing right now?
Well, it's already been dubbed FBI Friday, new email investigation on Hillary, or maybe they're just looking at old emails, they don't know. How's that going to affect the markets going into the election?
Well, we took a look at the initial reaction of what insiders were doing on Friday in Canada, and it was only, of course, one day, but the market was selling off, and we took a look and to see what was happening. And what we've looked at is sort of at a preliminary, what we found in a very preliminary way is that insiders in the resource area are either unfazed or, have picked up their buying, and it's continued a little bit here. This firmness in light of the, since Friday, let's call it that, while insiders in the areas of health and industrial type companies are still a little bit more cautious, nervous, and this is in Canada. We're talking over the last few days, and so I think that reflects two different realities. One is that despite what you hear in the Canadian media, and it just if it's not 99% of the comments are negative towards Donald Trump, it's certainly 90%, and how awful a Trump administration would be for Canada. I think there's two sides to every coin, including that one. And while we all know the personality issues with Donald Trump, we're looking at the policy side. There are pros and cons of both candidates, and believe it or not, even Hillary Clinton has some weaknesses for Canada, and I know it seems when you read the media in Canada, everyone wants her to win, but there are some sectors in the economy that would do better under Donald Trump, and energy is likely one of them. Hillary Clinton will not be doing the oil patch any favors. I think that's pretty clear, and if Donald Trump were to win, and it's still a huge long shot, not a prediction, but it's not a prediction. But you could see the Keystone Pipeline going through, which would be a big boost for the oil patch, because we can't seem to approve any pipelines in this country to get Alberta and Saskatchewan crude to market. So that would be a huge plus. So it's not all 100 days of gloom if Donald Trump and the GOP were to win. It's unlikely they are going to. But, there are some silver linings, and that's where you would find them in the Canadian market. So, I think people who are listening who are investors, should keep that in mind, that if there is this sort of panic sell-off, if Donald Trump were to win, you just be mindful that there may be some opportunities in some Canadian, oil and gas companies. But, of course, there's other things going on in the oil and gas sector as well, so it's a bit tricky. But in general, that would be a positive development for the oil and gas area. Of course, on the trade front, everyone knows that Donald Trump wants to rip up NAFTA. We'll see how that goes. But Hillary Clinton isn't exactly pushing trade deals either. And we'd have to see how that goes. So I think insiders are very nervous in the industrial area, probably for a Trump victory, but also, Hillary Clinton's not offering a lot of hope that you're going to see a big boom in terms of global trade. So, I think trading companies that have a lot of international trade, I'm not surprised to see insiders, particularly like from the railways, the insider sentiment in the railway space isn't very upbeat right now, and I don't see either of those two candidates helping the cause of the railway sector in Canada.
Well, Canada, unlike most nations right now, is still pro-free trade. They just signed the European Free Trade Agreement, worth $12 billion to Canada, whereas the U.S. is talking about tightening up its borders, keeping manufacturing in the U.S. That kind of talk. Does that make Canada stand out in the world that, hey, we're open for business? We want to have international trade partners?
Look, Canada is sitting in such a good strategic position right now, and it's really, the ball is in the court of Justin Trudeau and Bill Morneau and the team in Ottawa to take advantage of it. And I say that because I think, ironically, for the American economy over the medium to longer term, the best possible outcome in this election would be a Republican sweep. And why I say that is not because I'm a fan of Donald Trump's. So everybody's, no, that's not that's not what I'm saying. If you had a GOP sweep in the United States, you would get tax reform. You would get a number of decisions done that have not been done. And I mean, America needs reform. Every country, Western democracy can use with some reform. America needs it just as much as the European Union, as Canada, in different areas. Every country's got their weaknesses, but if you had a Donald Trump GOP House, GOP Senate, you would get tax reform in the United States. You would probably get an energy policy that most people in the rest of the world don't like, but you would get it, and so you would get things done, and it would probably boost growth, at least, in the short to medium term. People may not like the type of growth it is, likely be a high carbon growth, but it will be what it would be, but it would probably be a higher growth than the other scenario, which is a Hillary Clinton presidency and a Republican-controlled Congress. Now, just a week ago, it looked like the Senate could go to the Democrats, and I think that's unlikely now. And if that's the case, you're really facing this a really huge roadblock to get anything done in the United States on the policy front with a Hillary Clinton presidency, because you're just going to have the Republicans after her from day one. You could have the situation even, Jim, where Hillary wins the Electoral College. That's the system they use in the United States. Of course, your American listeners are well familiar with this, but for others, that the president is elected by the number of the way they get the votes in the states, and so each state has a certain block in the Electoral College. Okay, so she could win that, based off of the election results, but lose the popular vote to Donald Trump. Now, that would be the worst case scenario, as we could be in for 4 years of Watergate 2. Nothing would get done. Anybody that Hillary Clinton puts forward to be confirmed would be stopped. No legislation would get through. Nothing would get done. The United States would just be sort of caught in sort of this autopilot, which in some circumstances is not so bad. You don't have the politicians doing anything that's meddling, but the Americans have some big challenges coming up, and entitlements in Social Security and Medicare are one big area that will need to be addressed, and they're at risk of losing some tax competitiveness if nothing's done on that front. So there's some big issues, and I think that's why the stock market is wobbly here, is that there's a forward-looking the forward-looking picture in the United States right now is not very constructive, and while it may be a shock to many of my Canadian friends and listeners to hear me say that I think the best outcome for the U.S. economy in the North American economy, for that matter, would be a GOP sweep. I think that would be the best outcome. If that unlikely event were to happen, if the stock market sells off initially on that, it's probably a very good buying opportunity, depending on, you don't want to jump in all at once, but take a look and see if it's just fear, sort of a Brexit type knee-jerk reaction of people selling, because you could have some major reforms in the United States that would be pro-growth under a Republican sweep. Won't be the type of reforms that people in Canada like, but it will be what it will be. And as an investor, of course, you're dealing with the cards you're dealt. And if you got a Republican sweep, then you unfortunately the climate change initiatives are going to be there's going to be a big question mark. Trade is going to be a big question mark, but you're going to see smaller businesses in the United States, smaller cap companies, probably rejoice at a GOP sweep, because they'll start envisioning tax reform, lower tax rates, and lower regulation, and that'll probably really get the domestic economy going at the expense of some of these bigger global initiatives and leadership that the U.S. will take a back seat in doing under a Trump administration. But I think we've probably talked enough about the possibility of a Trump win. It's still at this point probably less than 20%. Unfortunately, and I say unfortunately, the base case now appears to be the U.S. is headed for deadlock under a Clinton White House and a GOP Congress.
Well, that was the case with Obama. Nothing got passed. It took him 6 years to get a budget through.
But this is going to be, just a couple of weeks ago, I was thinking, well, one of the risks will be that Hillary gets elected and she gets a Senate, and then she'll start getting things through, because she is a pro at the system. And I mean, the fact that she could most likely win this demonstrates how, what a great campaigner she is, and not just on the stump, but all the technical aspects that go with campaigning in the U.S. But Obama, he blew, I don't want to say blew, but he used all his political capital on Obamacare. That's going to be his legacy. And he'll be able to at least point to that. And whether you like Obamacare or not, that's what he's going to be able to point to. He did get it through. It was the first, type of universal medical coverage in the United States. So he'll have that as a legacy. I'm not sure what Hillary Clinton will be able to get through as president unless she's able to get the Senate. I don't think she'll be able to get anything done. I mean, that's 180 degrees from what I thought just even 2 weeks ago, but the world did change last Friday. I mean, it was FBI Friday, and that was a bombshell, and I'll be very surprised if the Democrats are able to get back the momentum to take control of the Senate. But it's still possible. That too, is possible, and maybe it's as likely as a Trump victory. We'll have to see. That would certainly probably be the outcome that the markets at this point would be most happy with. It's going to be more of a left of center government in Washington, but that's probably the markets will probably think that, well, that's better than no government, because we can at least pick the winners and the losers. Whereas if you have 4 years of gridlock, there's a super gridlock. I mean, we're talking Watergate type gridlock. It's hard to see how many winners there will be. Looking at what U.S. insiders are doing, Jim, we're just doing a report for our U.S. clients, about the U.S. market to our clients tonight. And the two areas that we're seeing some insider uptick in are, interestingly enough, basic materials, which would signal perhaps a weaker U.S. dollar, because if the dollar weakens, then those exporters of chemicals and steel and the like would do better. And the other area that we're seeing an uptick in is utilities, which would benefit from lower long-term interest rates. So it's almost like insiders in the U.S. are moving towards a more Brexit type scenario, if not that, then some sort of economic slowdown in the U.S. that would see the U.S. dollar and interest rates pull back here, and that has just developed in the past week. So that's a relatively new development. It's not a prediction. You can't use insider sentiment as a prediction in terms of what's going to happen, but it's part of a mosaic that you can look at, and that would be consistent with a weaker dollar and a capping of interest rates. Right now, there's the consensus in the market now is that we're going to have higher long rates, and we will eventually get higher long rates, but it may not be as quickly as what people are forecasting, particularly if we get this kind of gridlock scenario unfold on November the 8th.
We'll have more with Ted Dixon right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Ted Dixon. Ted, in Canada, the TD Bank has raised its basic mortgage rate to 2.85%. Is that going to be followed by other banks, and is that what we can expect with mortgage rates in Canada from now on?
Well, the answer to the first part of your question is we'll have to see. There's always somebody who has to take the lead, and I'd be surprised if others don't follow. But the answer to the second part of your question is yes. I mean, I think we are going to see higher mortgage rates, only if for no other reason than the changes to the mortgage rules that Bill Morneau introduced almost necessitate it. So because it makes it more costly for banks to engage in a lot of mortgage business. So I think you are going to see slightly higher mortgage rates, if at least. Now, interestingly enough, since our last conversation, there's been another big development in Ottawa. It's been the 5-year renewal of the Bank of Canada's operating mandate to keep inflation at 2% within a 1 to 3% bound. And that is a big deal. And we've, so we have to look at how our insiders are behaving in that context in Canada too. And what we have to keep in mind with this 2% target is that the recent experience has not been very good in Canada. Yes, Stephen Poloz was in Vancouver this week. He decided he wasn't going to talk about the housing crisis he helped stir up with his ultra low rates. Instead, he talked about the glory years of inflation targeting. Well, yes, it worked great in the 1990s. Yeah, hooray! But we're not there now. We're in a new age, and the recent experience under inflation targeting has been a disaster. We've had the boom and bust in the Alberta oil patch, where Stephen Poloz loosened monetary guidance and eventually cut interest rates. But it was lowering it was moving from a neutral stance to a loosening stance when oil was trading at $100. That really helped sort of throw fuel on the fire in Alberta. And in 2013, 2014, so we had a bigger boom and bust than we probably otherwise would have had. Well, this all happened because he was able to point to the 2% inflation target and say, well, I have to try harder to get to 2%. I can do that by, knocking down the loonie. So basically what this is going to allow him to do, and as a matter of fact, he'll point to it. He said, I have no choice. I have to keep driving down the loonie to get to my 2% inflation. Well, the other disaster that's unfolded under this 2% targeting is the Vancouver housing hyperinflation. So we could very well have the case where the Bank of Canada undoes the impact of this foreign property tax, where if the loonie falls under 70 cents, and I'm quite sure that the current Bank of Canada government will have no problem with that because he's solely fixated on using more exports to try and boost inflation. That seems to be his formula to success here. So we're going to be in for more of these attempts to weaken the Canadian dollar, make more Canadians poorer, and to Stephen Poloz's credit, he did admit to before Parliament that yes, this is a tax on Canadians. This 2% inflation. So get prepared to be prepared out there to be taxed more and have your standard of living fall. This is what the government's renewed, and I guess they decided it was better to stick with the devil they knew, the 2% inflation targeting, than do something different. So we've seen insiders in basically in the consumer area that where companies probably have some pricing power. They seem to be okay with this. We're seeing some firming of insider sentiment amongst the consumer consumer basic stocks. But when you get into some of the more economically sensitive industrial stocks, it's a different story. This policy is not going to do anything to promote Canada's prosperity. Anything that we do on the prosperity front is going to have to come from, as we mentioned at the beginning of the show, Bill Morneau and Justin Trudeau's policies on the fiscal and innovation side. So they really have to do the heavy lifting here, and I'm fine with that. In that, it's good to have elected officials bear the responsibility for the direction of the country. Stephen Poloz, who's the Bank of Canada governor, is not elected. We're stuck with him. So I believe it's 2020, and there's nothing we can do about it except try and hold him accountable for the decisions that he makes. And by the way, I mentioned him specifically because the way the Bank of Canada is structured, it is the Bank of Canada governor that sets the policy. It's not like the United States where you have a committee and they vote and they release minutes. Basically, several times a year, the Bank of Canada sends out a statement saying, Bank of Canada has decided they're going to do this or that to interest rates. Well, it's the Bank of Canada governor that makes that decision. Yes, he has a team around him. How much he relies on that team, we don't know. There are no minutes. There's no transparency with respect to the decision-making process. It's just whatever they want to tell us. And so it's a completely different system than the Federal Reserve System. Neither are perfect, that's for sure. And in Canada, we're stuck with what we've had not worked for the past few years, with this 2% inflation targeting. So it's going to have impact for investors. Be very careful in terms of consumer stocks. I think what you have to look at are those stocks that have good insider sentiment, that likely have either exposure outside of Canada, because if we see another assault on the loonie by the Bank of Canada, you're going to want to have exposure to companies with earnings outside of Canada. Or for those consumer companies in Canada, they have to have pricing power, which is essentially will be tagging along on this imported inflation that we're going to get, and be able to raise their margins along with the increased prices. So that's harder to do, but it's usually around in basic staple companies where basic consumer staples where you have to go and buy, you have to buy shampoo, you have to buy your fruits and vegetables, but then it depends how much competition's in those areas. So it's a tricky one, but there are probably some firms that are better positioned with lesser competition that will be able to tag along with the Bank of Canada's inflation target and benefit from it.
Are they going to recast the Canadian $1 coin with a image of Polos with his hands around the neck of the loonie?
Well, they might want to think about that, because it would probably be apropos, for what's going to be happening here. I hope I'm wrong, but I don't see how in a world where you've got technical innovation driving down prices, this whole notion that you should be basically a boat against the current and trying to push up prices in my mind, it's just insanity. But we've got another 5 years of this insanity, and I just hope that the Canadian dollar is able to survive it. And if it does survive it, it'll be because we've adopted some pro-growth policies that are effective, and that will require continued leadership from Bill Morneau. And we can talk about this. I think as we get up to the next budget, but he's done some good moves for the Canadian economy, and he's done some moves that I think are going to set us back, particularly specifically on the Canada Pension Plan, raising the contribution rates is not going to really help us. But the mortgage changes are all structurally sound. It's going to help rebalance the Canadian economy to something a little bit more sensible, hopefully, that it's not all sort of getting rich quick in real estate. It'll take some of that steam off. So they've done, and infrastructure, of course, if it's done right, it could be a nice boost to productivity as well. So they're doing some things right. They've got a few things wrong. On balance, hopefully it'll be a net positive, but we'll have to see. They've obviously got a few years left in their mandate, but the ball is squarely in their court, and that's the way it should be. I like it that way, seeing elected politicians having to answer 3 years from now, what have their policies done, and I look forward to the next election being able to discuss the impact of what the Trudeau government's doing, because our ability to grow economically is very much dependent on them making the right moves, not necessarily making the biggest moves, not necessarily spending the most money, but making the right policy moves. And if anything, right now, what's missing in their mix is deregulation. That is sorely needed in this country. There are lots of areas where we're overregulated, and that's an area that doesn't cost the taxpayer anything. But I haven't seen them talk a lot about that. Hopefully, we'll get to that.
Ted, thank you so much for chatting with us.
Well, it's great to be back.
My guest has been Ted Dixon, CEO and co-founder of Inc. Research. His website, CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.